Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's get a sense of what's moving in the stock market today. We can do that with Bloomberg's Christina Aquino. She joins us here in studio. Christine, what are you looking at?
We got to talk about Netflix, Paul. Biggest deal of the day, certainly, possibly of the week, right? So Netflix shares, though, not taking it very well. So ticker NFLX. Those shares are down about 0.3% at the moment, but earlier they were down more than 5%. So investors initially taking this deal as a negative. And again, let's recap, right? So Netflix agreeing to buy Warner Brothers Discovery in a deal worth $72 billion in equity value. Enterprise value is $82.7 billion. Warner Brothers shareholders receiving $27.75 a share, both in cash and Netflix stock. And before this deal gets done, which is expected to be done in the third quarter of 2026, Warner Brothers will complete the planned spinoff of its networks division. So they're going to spin off their cable channels like CNN, TBS, and TNT. And then on the Netflix side, apparently they have secured $59 billion, or up to $59 billion in bridge loans from banks including Wells Fargo, BNP, and HSBC. So perhaps investors may be just pausing a little bit, given that they're going to be taking a little bit of debt and then maybe parsing through the deal. That's why we're seeing a little bit of caution today.
Yeah, really big deal. We're continuing to see the headlines on this deal here. What else do you have your eyes on, though, in the market?
Looking at Ulta today as well, Nora. So Ulta ticker ULTA, that share up majorly this morning, up 11%. And that's because they raised their full year outlook after reporting better than expected results in the third quarter. So the company is now expecting comparable sales to be up as much as 4.7% in the current fiscal year. And, you know, Ulta really kind of capitalizing on the trend among shoppers. Yes, they are pulling back on some purchases, but not on their beauty products, not on their skincare. So that's still something that they're spending money on, and Ulta's capitalizing in that by building out their loyalty program. And as we know, you know, the strategy has really differed greatly from Sephora, for instance, which is their main competitor. Like Sephora's focusing on urban centers, Ulta very much focusing on the suburbs, and that's winning big for them.
Hewlett Packard Enterprises.
Hewlett Packard Enterprise, yeah. So that stock also not doing well this morning. So ticker HPE down just about 1.6%. And, you know, we heard from the company, they're saying that their current quarter sales falling short of estimates, revenue now at, or estimated to be at $9 billion to $9.4 billion. Previously, or rather the estimates among analysts was for $9.88 billion. We also have the CEO, Antonio Neri, saying that their sales in the fiscal fourth quarter missing estimates, and they're pointing to basically delays in their AI workload deals. You know, some of those were pushed in 2026. Yep. One of them is because of a delay in a Europe data center that's not built yet, which is, you know, part of the issue of banking on data centers. The build out takes time. And then there was another issue with the U.S. government. Essentially, their agreements with the U.S. government just have been delayed by the shutdown. So sounds like a bit of a bureaucratic delay there.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.